Great, thank you, Ian. And actually the poll result is a perfect transition into this session, since we are going to be talking about the key theme of risk management. Thrilled to have experts join us for this discussion. Katie Rowen, SVP and General Counsel at Vontier, Will Weerts, a partner at EY, and my colleague Maeva Charles, VP of Partnerships and Client Solutions at Datamaran. So a little bit of context setting. We're talking about data-driven external risk management. Mariella and Jerome and Alistair talked about, these externalities that now companies really have to think about when it comes to their strategy and decision making. And that was just accelerated, as we saw in the past year, with the pandemic, with the social justice movement, dramatic shifts in the risk landscape, but also the pace at which the risk landscape can really evolve. It really upped the ante. So we expect more out of C-suite when it comes to addressing these types of accelerating changes. And today, what we're going to be talking about is really how digitally enabled and data-backed risk management provides a new kind of insurance policy for corporate leaders. Since ultimately, a risk really can be an opportunity that you just happen to see too late. So welcome to Katie, Will, and Maeva. Glad to have you. So we've just heard about trust and the need to take ownership of a wider set of risks and opportunities in order to build that type of trust. With that in mind, what defines good external risk management practices? And I'm going to start with you, Katie. We've talked about this idea of programmatic elegance in the past, so would love to hear a little bit more from you.
Yeah, thanks, Susie. I mean, I think, look, fundamentally, what does good look like is it's rigorous, right? It's a rigorous process. We've heard a lot of folks already this morning talk about the velocity of change, right? The complexity of the world, the number of issues that stakeholders care about right now just continues to sort of expand further and further. And so, with all of those changes means that your process has to be incredibly rigorous. And the inputs that you're sort of sourcing from across the globe when you're looking at risks and opportunities, right? Those inputs and sort of how you're sourcing those really have to be expansive in order to have meaningful sort of outputs in terms of what your risks and opportunities are. So I think rigor first and foremost. And I like the trust frame for a lot of this, right? Because you're not going to build trust, for example, with your board of directors if they don't have confidence, right, that your risk process, that your opportunity processes are full of rigor. I think that programmatic elegance is a part of the rigor, right? There's so many different risk processes that happen across any organization right now. And many of them, in many places, sort of happen in silos or aren't fully integrated. So when you think about your enterprise risk management, process, whatever that looks like internally for your organization, you think about your ESG materiality assessment, the various risk registers that you might have, sub-functional assessments that might be happening, like cyber assessments, all of the disclosure activity that's happening, right? How do you over time sort of slowly weave those together to make it more and more integrated, which also will ensure that you have the right sort of lenses applied to all these issues internally. And it's an inclusive environment, an inclusive sort of process, and you're bringing in the right sort of stakeholders and experts internally. So I think those are some of the things that I would highlight for sure. When I think about, risk management at a high level for organizations, it's very analogous to sort of how I think about just governance overall, right? Do you have the processes in place to ensure the long-term vitality and prosperity of an organization? And again, sort of rigor and having sort of a data-backed tools and sort of processes is really critical to that.
Great, thank you. And that rigor, that you speak to, Will, this is something that we've spoken about in the past about periodic and subjective risk assessments really not being enough or sufficient. So we'd love to hear a little bit more if we could dig into that idea.
Yeah, thank you, Susie. Let me start with a very old phrase that is about the further away from Rome, the more difficult it is to implement policies and procedures. But it also, the more difficult it is to monitor external risks. So what we typically see in current risk management, and that applies still to many of our our clients, there are 3 areas of improvement, at least 3. One of them, indeed, is we still face subjective risk management, and subjective risk management is basically on, I say that to me, or belly feeding. It's we assess impact and likelihood of certain risks based on very recent knowledge. Our historic memory is pretty recent. We don't go back many years. People tend to forget the impact of the financial crisis. We had SARS traveling the world, but still you could argue whether we took sufficient precautions on, let's say, COVID hitting us. So monitoring external risk, quality external risk, really make risk assessments based on data, facts, is the future of enterprise risk management, but also really supporting boards in making fact-driven decisions and supporting boards then also in executing their strategy.
Great, and in that, how does technology enable that forward-looking dynamic risk process that you're speaking to, Will?
Well, I think technology will serve as an enabler here. So we typically serve global companies. So imagine you are sitting at the top of a board, and I was listening yesterday to the CEO of IKEA, who announced an investment of 1.5 billion, I believe, in the coming 5 years in ESG. So how will he know that his organization is doing globally what is in sync with the purpose of IKEA? So that can nowadays be done by technology, leveraging data, like we have the collaborative partnership with Datamaran. Having a platform, leveraging data available, quality data, enables companies, to monitor what's happening in the outside world. So it's truly an enabler, absolutely. It provides the opportunity to wrangle large volumes of quality data.
Great. And thinking about this idea of an enabler, Maeva, I think the themes that we're hearing from Katie and Will is this needs to be a continuous and rigorous process. So you really need to move risk assessments from sort of a project, right, to a dynamic business process. So could you just talk a little bit more about how we're seeing companies do that?
Yeah, absolutely. And I mean, to respond to that, also going back to what Will was just referring to, using data to monitor performance, but also using data to monitor events that might affect that performance. So, and that's where technology comes in to really systematically and dynamically track those developments and those, potential weak signals that are appearing here and there, but that are very difficult to see, with naked eye and a human view. And when you do that, and that's why, most companies will have that annual review of their risk, which is, really clearly today not enough to keep track of all those developments that happen and how, they can affect those objectives that you have. So, you can invest as much as you want in all those big programs, but in the end as well, you have to make sure that you get to the finish line and you identify those things that might affect as well how you get there. So that's also why you really need to broaden your horizon and have that view of the external landscape. And when I talk about external landscape and external risk, it's also, for instance, diversity and inclusion. Of course, it's an internal matter, but in the end, anything that is happening externally is also going to affect that. So you need to be able to have to track that and have a grasp of that in terms of risk, but also in terms of opportunities. As you said earlier, these are really two sides of the same coin, and being able to track those things are really, key to any to your business processes in general. So.
Absolutely, and to that point, it's about looking forward. It's also using historical data, and that's exactly why Datamaran is now collaborating with EY on next-gen enterprise risk management to combine those two, expertise and technology. And thinking about this idea of continuously monitoring the external landscape, Katie, that's something that Vontier is actively doing. And you, one of the things that you've said in the past is it's really important to do that in order to be able to update the wider executive team and the board and have data-backed evidence to do that. So thinking about, building literacy within the organization and ultimately achieving that type of authenticity and credibility at the top, but also throughout the organization. Could you speak a little bit to the process that you have at Vontier? How are you actually achieving that?
Yeah, one of the things that we've talked about is, for example, I think just a nice concrete example that's very simple is, we're using our Datamaran ESG materiality assessment and running that on a at least quarterly basis. And it's a standing agenda item. That's how we're sort of starting our ESG sort of executive council meetings to look at it and how have those material risks changed both from an internal and an external sort of focus, right? And I think it's again, being able to sort of use that data and in this dynamic environment with dynamic companies, sort of continuously sort of monitoring and also not being so wedded. Like the continuous part is really critical, right? And it always has been. You can't just sort of identify risks and opportunities, wait 12 months and do it again. But I think even with that sort of continuous monitoring of risks is not being so sort of close to them and biased to them that you're not taking continuous time to step back and you're not missing sort of new risks that are coming in addition to sort of monitoring the sort of risks that you're sort of continuing to see how they're changing over time. So that's just using that sort of running that sort of data and that materiality assessment on an ongoing basis and a frequent basis is a really important tool for us. So I'll pause there and we can sort of get into the the credibility piece and the authenticity and the trust. We can sort of get into that more in a bit.
Yeah, absolutely. And I think you brought up a good point there, right? It's not just about the process, the ongoing process, that's key, but it's about removing as much subjectivity and bias as you can from that process. And that's where a wider scope of external data becomes really important. And Will, I'm wondering if you could just speak to that point a little bit more.
No, I think with social media, with a lot of information being publicly available, the stakeholders of organizations become data-driven as well. They have a lot of data available, to ask questions to the organizations, to challenge the organization, and also within organizations, boards and board level -1, it's becoming data-driven. So that's extremely relevant also for enterprise risk management or ESG related functions to leverage the existing data of what's happening in the outside world to have a good conversation based on facts. So absolutely right, external data available in the outside world, with our Datamaran collaboration, we can start to identify risk drivers that might not be relevant at the moment, but also, if you look at COVID, the speed of that a risk can materialize at the global scale is significant. And that makes it extremely relevant to start monitoring external data.
Yeah, and that point about risk drivers, right? It gets to the question of where does this information come from? And that's really important because there was a question in the first session around how do you trust the data? So Maeva, maybe you could respond to that one.
Yeah, and so the question was where does the data come from?
Yeah, where does the data come from, and why is it important to have sort of that transparent audit trail to know where it comes from?
Yeah, absolutely. So in terms of how we see those things evolving very quickly, and Will and Katie both mentioned that velocity of change, how you're able to track those weak signals. One of the sources, for instance, we're tracking at Datamaran is soft norms and soft flows, and really that's an indication as to what is likely to come in the hard law space as well. We've seen a lot of regulations around the TCFD, for instance, that has materialized into hard laws. So really, it's being able to track all of those things that are happening, even outside your own country. We've had discussion as well with other clients where, it's not just your company in the US. It's not only those regulations that will affect you, but also, regulations that are popping up in other regions of the world, including in Europe. So being able really to track all of those kinds of information and have used that as those weak signals as to, what is likely to happen is really crucial, because again, there's so much data, as Will was referring to, that fourth industrial age, I think we say, where we have all those data that are being generated. Now it's in the end, how do you actually make sense of that, and how can you take decision on that? So really with, the technology that we have as well, it allows you to make sense of it. And yeah.
Yeah, and absolutely. I mean, that policy landscape in general is just picking up the pace, right? Just today, we saw the non-financial reporting directive come out with a new proposal, really focus on this concept of materiality, Katie, that you were speaking to earlier. Obviously, in the US, we see there are developments happening quite quickly with the US SEC. So to your point, Maeva, it's about, I think, looking ahead, right? And being able to better prepare versus being reactive. So you could be much more proactive. And that ties into the idea you brought up, Katie, around credibility and authenticity as a corporate leader. So I think, we've got a couple of more minutes before we end this discussion, but let's end with that theme of credibility and authenticity. And you've talked about this idea of creating sort of a C-suite framework and what that entails. So could you talk a little bit more about, how you're doing that at Vontier, and what does that C-suite framework look like today?
Yeah. I mean, I think the environment right now from a trust standpoint, which of course is completely tied to credibility, is just really incredible. Business is the most trusted institution across the globe right now. And amazingly, sort of employers are the most trusted source of information, even compared to media and government. And that comes from the most recent sort of Edelman Trust Barometer. And so when you just sort of think about that sort of broader context and landscape, I think the expectations are so incredibly high from all stakeholders to really understand, what are the material issues for us as a C-suite, to be informed about those material issues and to be able to sort of educate and speak about them with credibility. I think there's real hunger there. And I always sort of start with our employees, right? I think there's a real hunger there for our employees to sort of understand how their job sort of connects to our purpose in the greater world, and to understand sort of what we think about certain issues and what our stance is about certain issues and how that ties into our purpose and our values, and to really drive sort of engagement and pride. So I think, a few years ago, the topic du jour was CEO activism. And I think we've moved so well past that, because there's so many issues and there's such hunger to sort of learn about those issues, that it really takes the entire C-suite as a team to have sort of, I would say, like communications leadership across these issues and working together to speak about them. Because sometimes on an issue, like if you're talking about inclusion and diversity, employees, they want to hear from their CEO, but you know what? They also may want to hear from the VP of inclusion and diversity. They might want to hear from the CHRO on that topic. And so I think it really does take, with the number of issues that we're talking about under the ESG umbrella, it takes the entire sort of C-suite to be sort of informed and speaking about those with credibility and with trust.
And then that gets back to that idea of programmatic elegance, where you need to be across the enterprise looking consistently at these issues and really align not just on the issues, but also ensure the process by which you analyze those issues is consistent.
That's right. And it's also just, there's a focusing piece of it too, right? I think Alistair said to kick off the session that it was a noisy space, and that's absolutely true. And so I think sometimes it's just hard to know what to talk about, right? And so you need to be grounded in those sort of materiality assessments to sort of, and use those as a focusing tool, again, to build trust and to gain credibility and to have authenticity.
Absolutely. And Will, did I hear you wanted to chime in on that last point?
It's if you talk about enterprise risk management or risk management, and in another session I also refer to, it's also personal risk management. We are being bold in the media now on certain things. We're making big investments. We want to become carbon negative, carbon positive, etc., etc. But now it's not only your shareholder that is having an interest in it. There is a much broader audience that is paying attention to what you're saying and how you're going to deliver. So that's the risk management part around ESG is becoming very, very important. And the governance part, like Maeva referred to, the program assurance, how does it all come together? Transparency, the quality of the information shared. This is really, it's going to be a game changer. Absolutely.
Absolutely. It's not just about the reputation, right? It's regulatory risk, as we're seeing. It's strategic, it's competitive,
I think
and
now,
financial.
Yeah, I think now for most, but there are more specialists and they call it no better. I think now it's reputational, and then it will become a compliance and a legal, and then it will become reputational again. So, and this is also, you can seize the opportunity. That's what we also see.
Absolutely. Well,
Great.
Thank you so much for this rapid fire discussion. We talked about, how issues are popping up in the courtroom of public opinion and now going into the boardroom, which is a perfect transition into our next session. So thank you to our panelists, and over to you, Ian.